Welcome back. You're watching Midcap Radar here on CNBC-TV18. Let's get on to a corporate conversation now. And real estate major Signature Global is the company in focus. It reported a decent earnings for the first half of the financial year 24. The company has guided for pre-sales of 4,500 crore rupees and collections of 2,900 crore rupees. We are now being joined by Rajat Kathuria, who is the CEO of Signature Global, who is joining in. Mr. Kathuria, good afternoon. Thank you so much for joining in. I'll get to your guidance straight away. You've guided for 4,500 crores of pre-sales in FY24. And in the first half, you have done around 1,900 crores. What makes you bullish that you will cover the remaining bits in the second half of the year? What is the launch pipeline and what is the sales potential that you envisage in the second half of this year?
Sure. Thanks for inviting us on your show. So I'll get straight away to the answer. So we've done close to about 1,860 odd crores in the first 6 months in terms of pre-sales. To put things into perspective, over the last 2 years, the pre-sales number has literally grown at a CAGR of about 42%. Between FY21 to 23, our pre-sales number has doubled. In addition to that, during the first 6 months of this year, our per square foot realization also grew significantly vis-a-vis the same period last year. So we did sales at about 9,800 odd rupees a square foot in comparison to about 7,500 odd rupees a square foot for the same period in the previous year. For the current year, over the next 4 months, we intend to come up with new launches. Usually we see a spike in pre-sales as new products are being launched. So for this balance period of 4 months, we're planning launches of about 8,500 odd crores. That makes us very confident to achieve our overall sales guidance for this financial year.
So that would convert into volumes of how much, Mr. Kathuria, the 8,500 crore rupees of business development potential?
So 8,500 crore Sonal is the new launches which we are planning in the next 4 months. If you look at the overall portfolio, we are currently developing about 17 million square foot, which is expected to get complete by end of fiscal year 26. Estimated by March 26, over the next 10 quarters, we intend to complete this entire 17 million square foot of area. This pipeline will give us a revenue recognition of close to about 12,000 odd crores. During this same period, we have new pipeline of almost 27 million square foot. Over the next 10 to 12 quarters, we'll be doing launches of almost like 27 million square foot, of which product equivalent to about 6.5 odd million square foot is getting launched over the next 4 months out of this 27 million. For which we are giving a number of about 8,500 odd crores.
So in that 8,500 odd crores, Mr. Kathuria, that you are expecting, the potential that you're expecting, what does that do to your debt number? You mentioned you have a very strong pipeline of almost 17 million square feet now and 27 million over the next 10 to 12 quarters. What does your debt number currently look like, and are you cash flow positive currently?
Yeah, so sharing few thumb rules which we come across our business and have tested them over a span of time. So during the first 6 months, we collected in excess of 1,300 odd crores. Collections have been growing at a good pace. For the full year, we are anticipating operating cash flows of about 2,900 odd crores. We've usually been earning an operating surplus of about 35%. Which is before reinvestment into land, that tends to be discretionary in nature. So operating cash, before reinvestment into land, we usually earn a surplus of about 35 odd %. So within this financial year, out of the 2,900 odd crores of collection, we anticipate that we'll have an operating surplus of about 1,000 odd crores for this year.
Okay, so cash flows, operating cash flows or the surplus will be around 1,000 crore rupees. So you've also been on an acquisition spree, be it the 25.14 acre land that is in SPR to the company that you bought recently as well, and that is Gurugram Commercial City Private Limited. There as well, the consideration or the enterprise value has been high. How do you plan to fund it? What will this do to your debt? Because you did see a decline because you used the IPO proceeds, but what is the absolute number and what will it look like, say, next 6 to 8 months?
So the principle which we follow is that our net debt number should be by and large in the range of the operating surplus, which we create in any particular year. The logic behind that is that in any particular year where we decide not to acquire further land, because we have, reasonable, I would say, land inventory. But, in any given year, if we decide not to reinvest into land, we could literally bring the net debt number down to zero. So as a matter of principle, if we are targeting an operating surplus of about 1,000 crores for the year, our targeted, peak net debt would be about 1,000 odd crores. So even after acquisition or strategic acquisition of this entity called GCPL, we are quite hopeful that our net debt number by the end of the year should not cross 1,000 crores.
But do you intend to bring that number down, net debt number down to zero, Mr. Kathuria? And I'd club in one more question as well. Affordable housing as a segment has been under a lot of pressure. Do you see that affecting your projects because you generally cater to that kind of a market? What is your sense on the ground as of now?
So, as far as our product segments are concerned, we are about a decade-old company, Hormaz. So, first 5 years of our existence, we've just done affordable housing, and that's how we built our strong brand, our distribution network in this part of the country. Over the last 4 to 5 years, we've pivoted the model a little, given that land prices were going up. So, we've been doing a lot of mid-income housing. Whatever projects we've launched over this, or we plan to launch, over this entire financial year, are all mid-income housing projects. Demand tends to be very good across product segments, whether you do affordable or mid-income, or in the current market, even luxury, housing, which we do not do or intend to do. Demand is very robust across these, product segments. For the primary reason that, Gurgaon as a market has seen a lot of growth in infrastructure, office space absorptions have been good. Social infrastructure has grown, across, segments, whether it's healthcare, education, social infrastructure. But housing somehow, the supply didn't turn up to the extent the demand has been there for the last couple of years. So there's a huge supply constraint scenario right now in the market. We feel that even with our sort of, supply or market supply, the demand's not getting met. So, we are fairly bullish.
We get that point. Yes, Mr. Kathuria, thank you so much for joining us today. Out of time, but it was a pleasure speaking with you and getting the insights and the outlook for the company going forward. We'll slip into a break with that and get back with markets and stock-specific action. Stay tuned.